We have talked about automotive industry investing 300 billion to 500 billion in terms of their own ecosystems, which sounds impressive, but it's nothing in the scheme of what governments are doing all around the world.
If you bought companies like Giga or FDX, or as a Canada Nickel, you're up, as much or more than if you had that gold stock. So it's fun to get in early, and there's still lots of money to be made between now and the top of this next cycle.
Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up. Helps us understand if these are the sorts of videos you'd like us to continue making for you. You can leave your comments below. It helps us with these sorts of questions you think we should be asking. I think we've done, of course, what you thought of Mark Selby's nickel analysis today. You can catch this as a podcast, article, or transcription in cruxinvestor.com. And of course, for our Crux Investor Club members, you get access to this interview. You also get some training courses, macro insights from experts from all around the world. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, more videos like this, click the notification bell. We caught up earlier today with Mark Selby, nickel market commentator, also CEO of Canada Nickel Corp, TSXV listed nickel explorer and developer. We talked today about what's been going on in the nickel market. Prices are up across the board for nickel. BHP mentions nickel as one of their three future commodities, along with potash and copper. We talk about what's happening in the US, China, Philippines, Indonesia, as usual. And we get some sort of insight to the market as to, what, carbon tariffs, incentives are going to be out there and what it can mean for companies, what it means for investors, perhaps what we should be looking at, particularly in the description at some of those things. Anything interesting in particular, click on the number beside that topic. That's got a timestamp, and I'll jump you through to that part of the interview. Otherwise, sit back, enjoy what Mark has to say.
Mark, how you doing, sir?
I'm excellent, sir.
Yeah, good to see you. Look,
Yeah.
I apologize. I had a week off last week. I had a staycation, and the kids were arranging for us to do fantastic things in light of not being able to travel. So we've missed a week. Totally my fault. But did anything happen while I was away?
It's important to take breaks. And yes, you probably missed 2 weeks when the nickel price had one of its major moves. But we're trading just under $15,000 a ton.
Wow.
And again, there's the, momentum that we've talked about. So, iron ore prices, up to 6-year highs. Copper prices broke through $3 a pound briefly. They fell back in, but look like they're taking another run at it. And then on the fundamental side, we're seeing, as I said before, you need to see different parts of the chain line up, and you've got ore prices going up, NPI prices going up, and stainless steel prices going up. So, I think we're actually finally getting everything sort of lined up, and again, that's why we're seeing prices just under $15,000 a ton, or $675 a pound for those who think in dollars per pound.
It's a pretty amazing time for people investing in the mining space, or at least thinking of investing in the mining space. I even saw a BHP report talking about commodities of the future: copper, potash, unbelievable, but it's the future, and nickel. Mm-hmm. You made it.
Yes, yeah, and again, this is from as for context, BHP spent most of the 2010s, in fact, about 7 years of that decade, trying to sell their nickel business. So, again, this is a full 180-degree flip in terms of their view on that commodity. So, again, I would encourage, people, if BHP's thinking this way, there's a pretty good chance Rio Tinto's thinking this way, Anglo American, Glencore, and all of the other, mining companies further down the food chain. So, again, I think, they're the ones, if you're going to see big takeouts happen, they're the ones who have the cash to be able to do the big takeout. So the fact that those three metals made the list, I think is pretty important.
That's pretty exciting for sure. But let's stick with the nickel thematic here. So, what are they're clearly going to be looking for scale, and they're going to be looking for grade, and they're going to be looking for the right jurisdictions. But what has the past or history taught us about the way that they go about making these acquisitions?
Well, so, again, in the nickel space, if you just look, so they sort of made this shift around 2017, 2018. And so, what you saw was, one, they developed their Yakabindi project, which, was just up the road from their Mount Keith operation that had operated for 25 plus years, was a large scale, low grade mine. And again, that's where, again, I think a lot of retail investors, it's grade, and it does, high grade does make things easy, but you typically don't find 30-year mine life, high grade resources anymore in a jurisdiction that any company would like to operate in. So, the reality is, for the majors who want, multi-decade, multi-expansion type resources, it tends to be at the lower grade end of the spectrum. So they developed Yakabindi. They just bought Honeymoon Well from Norilsk, which is in the same region in Australia. And again, it's another large scale, low grade deposit. So again, it's scale. They want something that they can get multiple commodity cycles out, because they know you may not get it right the first time, but if you can, you still have lots of resource to pick it up the second, third, and fourth time, then you've got a better chance of making money over the long term on your investment, which is, what those guys are very focused on.
And so which one are the jurisdictions that they are most likely to be interested in?
Well, again, when you look at their asset portfolio today, for BHP, Rio Tinto, it's really, Australia, South America, and North America, are the vast bulk of their assets. Again, political risk. Some companies, so Glencore seems to be more tolerant of political risk, and some of the larger Chinese companies that have gone abroad are also, more comfortable with the degree of political risk. But again, as we saw this week with Northern Dynasty in the gold space in Alaska, they thought they had their permit and then they didn't have their permit, right? So, and again, it's not just a country, it has to come down to an individual jurisdiction that you need to look at. So, they don't want to have assets turn to zeros or have their values greatly diminished by the decision of one political decision, making that happen. So, if you look at their, asset allocation breakdown, you'll see it focused in a very small handful of countries.
Okay, so I'm going to come back to that in a second, because we've had some fantastic questions sent in by viewers to this. I think that people are appreciating getting the macro view of nickel, which is fantastic. But let's just stick with the macro for now. So, what's happening in the US versus China? Because we talked previously about the what's happening in China. I think you're going to tell me that they've slowed down a little bit. Weather conditions are reducing activity there. But give us a sense of what's going on around the globe with regards to nickel.
Sure. So, again, right now the China reflation trade is happening. The pace of it has slowed down a little bit, but again, where you see commodities across multiple commodities, setting new multi-year highs, which we have seen in a bunch of commodities, that says the reflation trade is on. Whereas for China, Q1 was the bottom, and you're seeing good quarter over quarter. And again, they've reflated so hard that you're seeing good year over year numbers. In the rest of the world, Q2 numbers are coming out again. For I think most of the rest of the world outside China, Q2 is going to be the bottom. And so again, you're going to start to see good year over year numbers start to emerge, quarter over quarter numbers emerge, in a number of jurisdictions. And so, on the nickel front, with China being the bulk of stainless steel growth and the bulk of both nickel supply and demand with Indonesia. The 17% growth we talked about last time, year over year, we're seeing that continued strength in August and into September. There's no signs that that's slowing down. The fact that we're seeing, stainless steel prices went up more than 10% last week. That's a major increase. And that says, this rebound in demand in China is not going to slow down anytime soon. So, it's a very good sign for where the nickel market is headed before year end.
And iron ore as well. Up prices are at 6.5 year highs. It's incredible.
Yeah. No, and again, it's again, China's trying to reflate their economy, gone to the same playbook that they've done multiple times over the past 2 or 3 decades, and again, it's trends for those of us in the commodity space. It's a welcome push, and it looks like it's going to be continue to be sustained, through the end of the year and beyond at this point. So
that's incredible. We had a company on last week called Ideanomics. It's they're listed on NYSE, but they have got huge access into China. Their business is in China, and they're talking about the EV thematic in China, and it kind of gives a real sense of what's going on there. We're talking about retrofitting existing trucks, lorries, large, carrying vehicles, buses, you name it, and they're retrofitting those. It's going from, moving them all to battery driven vehicles. Some of them being converted into autonomous vehicles. It's kind of exciting to see, but also 100,000 electric vehicle charging points across China, right? I mean, it just insane. And they're going to be doing this by 2022, folks. So, and when the Chinese say we're going to do it, it gets done.
Yes.
So there's some benefits living in a sort of state-controlled environment.
Authoritarian. Regime where the punishment can be pretty severe for not achieving a goal. No, that's the part. And I think the other really key piece of this, I mean, we all focus on cars and Teslas, but when you look at the entire vehicle market, the city of Shenzhen had an all electric bus fleet, a year or 2 years ago. So, that whole shift in the whole range of vehicle fleets. And again, the battery that's going to be in a bus is much, much larger than it is for a car. Now, given the distance that a lot of buses travel, you're going to see a lot of lithium iron phosphate be used in those applications because they don't need to drive 500 miles. They're doing a relatively short loop for a certain number of hours a day. So that's not going to translate directly into all nickel demand. But again, when you get to, the Tesla, semi truck, and you're going to see semi trucks elsewhere in the world end up shifting to electric, those are going to be great big, long range, lots of nickel batteries that are coming down the pipe. So, again, that's where, really, automobiles are really just the tip of the iceberg, and you've got, buses, trucks, and a whole bunch of other vehicle fleets underneath it that are, coming to the fore. The other part is California. There's a news, story that there was power outages, and they're talking about having, more battery storage in their grids to be able to balance the loads because of solar and wind the sun doesn't always shine and the wind doesn't always blow when you want it to. And so they had to do that in South Australia. Tesla put a big, set of battery packs in there. You're seeing that happen now and talking about it more in California. And again, you'll see as renewables become a bigger share of the grid, having these kind of batteries to help balance out some of those loads is going to become more important. Again, not always nickel. There's other technologies that are very suitable for, standalone storage, but, nickel will be a part of that. And again, it's just one more, battery application that's going to need a lot of more nickel in the future.
That's phenomenal. Yeah, we were talking to someone else last week with regards to the black ants in California last week, and obviously I think it was in the context of nuclear because there's one of the nuclear plant or reactors due to basically I think it's in 2 years' time or 3 years' time is basically be shut down unless they apply for an extension, but it doesn't look like they're likely to. And that's the point here is that there's lots. And when I was talking to this Ideanomics group about the number of vehicles, the charging points, etc., the big topic was around different types of energy provision solutions. Yeah. Right. I mean, and once you start to try to understand the way that the Chinese are approaching this, from nuclear, from hydro, and all the conventional forms of energy production, including stuff that are trying to phase out coal. You certainly appreciate the additional amount of energy they believe is going to be required to charge their battery-driven fleets of cars, lorries, trucks, buses, and the rest, let alone homes for domestic use. Yeah. It's phenomenal, but what it does is gives you some clues as to the amount of nickel and copper and lithium and graphite. And I do appreciate your point. There are going to be different batteries for different solutions, and there's going to be different designs out there. But it's all of the above, not some of the above that's going to be required. Right.
And that's again sort of ties back to the earlier comment in terms of BHP's view on future facing metals. They're not looking at this as a 2-year trade in nickel and copper and potash. they think in multi-decades, and so, this is a theme that they think isn't, when they say publicly like this, that this is where their commodity focus is going to be, this will be where their commodity focus is, not just for the next year or so, but, in their mind, if they've done it right, this is something that they'll be focused on for the next 10 to 20 years.
No, I think it's interesting times, but we're going through a process now of just trying to understand all the moving parts necessary to put this together. And when you start talking to some of these big players who do things like your BHPs in terms of their planning, like the Chinese government, and even big players like Tesla, doing their 100 megawatt battery in 100 days. I think it was to prove a point about their ability to solve problems. It in itself wasn't a big battery, but it is what it showed the potential could be. You start to get a sense of how quickly this thing's coming down. We have talked about automotive industry investing 300 billion to 500 billion in terms of their own ecosystems, and which sounds impressive, but it's nothing in the scheme of what governments are doing all around the world today, because they know what's coming down the line. And as we as an investors looking at this and going, these companies are just kind of promoting. They're talking the story of nickel demand. Of course, they've got to try and persuade us. But I don't think we're seeing it yet. Haven't been seeing it yet. But I think people are awakening up to the fact that actually this COVID thing's not getting in the way of these plans, because they've been doing this for 5-10 years in some cases, getting ready for this moment.
Yeah, and again, I know the gold bugs are all dancing around doing the happy dance, knowing that gold would get to $2,000 an ounce. For some people, it only took 20 years longer than they said it was going to. But the reality is if you look at the copper equities and the nickel equity, the copper equities performing since we talked in mid-May. And then the nickel equities just in the last 3 or 4 weeks, if you bought companies like Giga or FBX, or ESA Canada Nickel, in the last 3 months, you're up, as much or more than if you had that gold stock. So, and again, those are not typical moves. You always see these big moves at the start of a cycle, and then you see a couple more big moves in the cycle before things peak out and roll over again. But again, it's fun to get in early, and there's still lots of money to be made between now and the top of this next cycle.
Okay, you're trying to poke a bear there, are you? Is that what you're doing with gold bugs? You just
Oh no, I just love the.
Just saying. Okay, I understand. Let's just stick with the macro here. I'm interested in how governments are going to react to this. We've talked about the fact that they're building these big ecosystems for themselves, but as an investor, what I'm trying to understand is, what are they doing in terms of some sort of trickle down economics for mining companies, for instance, in terms of environmental regulations, relief on those, or tariffs, or repatriating supply chains, or how do you get involved with government subsidies, those sorts of things. Are you seeing anything in I know you're Canada, but North America generally, are some of those things going to come to the aid of junior miners?
Oh no, very much so. I'll give you a very concrete example. Is in my decade during my past life advancing Dumont at RNC, there was a certain amount of attention, but again, with the EV shift and the realization that there's a bunch of strategic metal supply chains that countries really need to focus on. And so, about 2 weeks ago, 3 weeks ago, I was representatives of the U.S. government who were involved in strategic sourcing said, hey, we want to get to know your company. We want to get to know your project, because, this is something. And again, this is something that's not just Republican or just Democrat. This is a rare bipartisan support initiative to be able to look at securing those metals which the United States deems strategic to their interests. Nickel has always been, one of the metals that has fallen into this category. So, that in itself, is tremendous, that there are levers of government that are willing to, work to help you, as opposed to, slow things down or create bureaucracy or something like that. I mean, the nice thing with a project, and again, I really encourage investors to focus on jurisdiction. Mining is a risky enough business to start with. Having a politician make a decision which can, vastly, impact the value of your asset is very challenging. So again, we saw that with Northern Dynasty just earlier this week. So, the good
what
thing
do you mean
is,
about that? Talk about that. What happened there?
Yeah, so they've been looking to advance it's one of the world's largest gold and copper deposits. Unfortunately, it's sitting in close proximity to a sensitive salmon fishery. There's a number of people who are quite concerned about the possible impact of that mining operation on that fishery and the surrounding environment. And so, it's been back and forth for a number of decades, and it looked like it was going ahead. And then there was an announcement this week that, the U.S. Army Corps of Engineers, who was responsible for granting a certain permit, said, we need to have some more information, and we need to understand how you might mitigate some of the impacts, that type of thing. So, again, being in I would encourage investors to look at where an operation is and see, okay, have they recently permitted a number of mines in that area? Or, is this the first new mine in 50 years? Or is this the first mine ever in this jurisdiction? Because it just creates that level of risk that, there may be some issues with the community or, so forth. The local stakeholders who, again, are going to be impacted for many decades. We in the mining industry did a horrible job, for a very long period of time in terms of taking that for granted and, literally abusing it. Today the industry's come a long way, but, we can never take it for granted. We need to really, make note of the fact that we have an impact, and we need to own our impacts, on the local community, on the local environment, and do everything in our power to make sure that our projects, minimize those impacts to the maximum extent possible, or mitigate them to the maximum.
Well, let's talk about that. There was a Bloomberg article came out last week, when I was on my staycation, but I still read it. And the headline was, Elon Musk is going to have a hard time finding clean nickel. And basically, they go through a series of examples where, there are, because we talked in the past about clean nickel versus dirty nickel and all sorts of like dumping deep sea toxic waste. And, there's also some practices in mining which need to be addressed. And they go out and quite nicely say, well, actually, here's a whole bunch of different forms of pollution that miners need to be held responsible and accountable for. So, and I guess in the context of, our discovery around ESG, and, you've got your own net zero carbon initiative going on. I mean, did you see that article, first of all?
Yeah, no, I did. And I thought they did an excellent job. We highlighted in the release where we talked about net zero carbon because, again, we think we're going to have a relatively low footprint in a number of areas. But that is the real crux of the issue, not to use in terms of nickel is, when you start looking at and say, okay, let's take out all of that supply of nickel that has a high SO2 footprint, and a certain amount of production disappears. Let's take, all of the nickel that has, deep sea tailings discharge, that's associated with it. There's another block of nickel. What we've been talking about before is, okay, how much of this production has a very high carbon footprint associated with that? And you cross that one off the list. And by the time you're finished crossing off from each source of pollution, there's really not a lot of nickel supply left, that's relatively low footprint at this point in time. So, again, I think that's the real opportunity, not just in nickel, but across the entire sector. Like, mining companies, need to not talk about it in a 2050 timeframe, but, get going and really look for those opportunities where you have an ability to create a net carbon or low carbon mining operation. And that needs to be, a key part of your checklist going forward in terms of those assets you're going to look at acquiring.
That's interesting, Mark. But I also read a piece from a fund manager who's saying, at the end of the day, when we are out of some of these commodities, whether it's clean, whether it's dirty, won't matter. We need it, and it'll get produced. It will get mined. So what are you saying? You're saying this kind of clean nickel, dirty nickel conundrum is fine right now when you can control that and you can take advantage of that, or that you can charge a premium for it or something? mean, how's it work?
Yeah, no, I think where it's going to be is this sort of first step is a preference. So if I have, nickel from two suppliers or metal from two suppliers, one is low carbon, one is high carbon, I will always choose the low carbon alternative first. And if I run out of that, then I will use the other one grudgingly. I think the second thing, and I think that, the kind of mechanisms that the EU is looking at in terms of carbon taxes and sort of equalizing, or charging for, importing materials that have a high carbon footprint attached to them. I mean, to me, that's, again, with our net zero initiative is quite exciting, because when, if they're going to have effectively one of the structures they're looking at is a value added tax, based on the carbon added tax, basically on how much carbon's coming in. And so, all of a sudden, if instead of, okay, well, it's the same price, and I'll choose one versus the other as a preference, which again, I think is the first step. Then you move into, oh, well, okay, if I import this one, I have to pay a 15%, carbon added tax, to the EU. And if I import your product, then that comes in at a 0% tax. That allows me as a supplier to capture, as much of that 15% or whatever that tax is going to look like, gap as a premium as a supplier. So, that's where the global markets are headed. And so again, those companies that are able to get in early and grab those handful of assets where you can do this, then, they're in great shape. And again, I think since that article's come out, you've seen companies like Giga and First Point, that again have a nickel hosted in similar mineralization that we do, that has that zero carbon potential, have all done very well in the past few weeks here.
Yeah, for sure. I mean, so I think we need more guidance from the governments on, the environmental taxes or tariffs or reliefs, or how they're going to go about managing and capturing that, to get for you guys to get a sense of what your economics could be, or how much better they could be as a result. I mean, it's early days, I guess, but are you guys banned? Is there a kind of band of people that are lobbying or talking to government or state to sort of try and understand what the world could look like going forward? Because it's all just theory at the moment.
Yeah, no, it is just theory. And again, the key thing to do is, to advance your project in a timeline, given the regulatory framework that exists, and being sensitive to that regulatory framework could change fairly dramatically. So, again, our net zero approach is, again, because of the unique nature of the rock and the location, and the ability to potentially process downstream, allows us to take advantage of that. But by focusing on that, I don't have to worry about, if the government slaps on a massive carbon tax on diesel fuel, because I'm going to be using less diesel fuel than most other nickel mining operations. If the governments decide that, okay, I'm going to, if you are responsible for generating downstream carbon, I'm going to somehow go after you for that, because you made a profit on that. Again, I'm not going to have to worry about that. So, for us, having that net zero focus from day one just allows us to minimize the risk of any changes in government policy, going forward. So,
okay, but and I don't want to make this too much about. You're talking about what you've got, but just generally as an investor, am I looking for companies who are capable of charging a premium for having a cleaner product, whether it be nickel or other kind of base metals, because I'm going to, as an investor, I presumably would get some kind of uplift if there is sort of some general kind of carbon tax that kind of comes in, or tariffs, etc.
Yeah, I would say, to be honest, at this point, I would treat a premium as a possible upside, but not sort of that you have to get the premium to get there. That's the way I would think about it. And again, given sort of the winds are blowing in that direction, you are more likely to get better returns if you are sort of, going, trying not to run into the wind, to get a return on your investment.
Any thoughts you want to leave us with regards to nickel?
Sure. So we've been talking about each week in terms of sort of that real key triangle that's going to determine where prices are going by year end. So, it's Chinese demand, its Philippine ore supply, and its Indonesian NPI production. And so, what's really tipped the scale this week and why you saw another major move in nickel prices over the last 2 weeks is that, again, that big surge in Chinese nickel demand that we saw in June looks like it's going to carry through, easily through the fall. We had a stat come out that said the nickel content of Philippine ore supply had dropped by double digits during the first half. And so now Indonesian NPI production, again, when people are looking at their forecasts, it's a big ramp up. But given what they're seeing on the other two parts of that triangle, they're not sure that it's going to be able to ramp up enough to fill that gap. So, I would say where I was fairly cautious a few weeks ago, the balance is tilting around to, where I think we've seen a nice price move. And I think from here, rather than stepping back, as I talked about before, I think we've got flat to higher upside from here, depending on how, ore supply continues over the next few weeks here from the Philippines.
Fundamentals, Mark. Back to fundamentals. And something which I need. It's true. I mean, it's starting to build up quite nicely, like a lot of commodities. But it's a nice picture being painted. Can you do me a favor?
Sure.
Can you say hello to Adelaide? She is a big fan of this, and she watches the show every week. And I'd like you to just give her a wave, please.
Hi, Adelaide. Hi from Matt and Mark, and hopefully we'll both be out in Saskatchewan at some point in time.
Well, there you go. So Adelaide, that one's for you. Hope you enjoyed the show today. Let us know if we did anything wrong. And Mark, thanks very much for your time. I do appreciate that. It's a great feedback. We're getting lots of positive feedback on the show. Some great questions sent in. We've got a few sent in about your company, which is Canada Nickel Corp, which maybe pick up next time you're on the show.
Sure.
And maybe to help us try and understand, what net zero carbon is, how you can prove it, what you know today, and what you're going about trying to discover about what you've got there. So we'll see you again next week, shall we?
Sounds good. See you then, Matt. Take care.